That's right. The ECB takes over as supervisor of the region's top lenders on November the 4th. So its reputation is really on the line this weekend with the test results coming out. So let's delve a little deeper on that with a former investment banker, Martin Hellmich, now a professor at the Frankfurt School of Finance and Management. Thank you very much for coming in. What do you think? Should the banks be worried right now?
I think we are in a situation where only a very limited number of banks will fail in this stress test. On the other side, it's also clear it cannot be a stress test where everybody will be successful at the end, because obviously it's clear that in the European banking industry there are still a number of weak candidates, and it's very important that this stress test is reliable. And finally, it will be clear that the worst of these candidates will be identified at the end.
Very limited? So out of 160, just 1, 2 or 3?
No, but I think it will be below 10. Yeah, I think it will not be more finally. And it's for me, for example, it's not sure if there is even one German candidate here which will fail. I think it's not sure. It can also happen that everybody here in Germany will be successful at the end.
Is that surprising, considering that the ECB has had to shoot down, according to some people, countless pleas from banks and from national supervisors for special treatment within these tests?
I think I cannot believe that anybody is taking here the risk that banks in different regions here will be treated not equally, because that would be really hit the reliability of the stress test.
The reputation of the test.
Mainly, yeah.
There are also claims that banks have failed to provide all the necessary data. Now, as an investment banker, you'd know there are lots of tricks to the book. Are some lenders scrambling to hide what they can?
I think the problem is not the data, it's more the problem because we are talking about this a specific term, what are so-called risk-weighted assets, how banks are measuring the risk of all the assets they have on the balance sheet. And here banks are doing that with internal models, and the question is how these models are calibrated. And here, it was an approach of the ECB to make sure that internal models are not calibrated in a way that they underestimate risk.
And that they line up with the ECB's rule book, because there are also claims that supervisors have revised the way they value assets. I mean, wouldn't that dent the test's reputation? Also here, I don't believe that because everybody has worked, everyone who was involved on supervisory side on this stress test has worked, that there will be a common playing field. Yeah, so I cannot believe on this rumor. So yes or no, you think the exercise is robust and thorough, as the ECB puts it?
Sorry?
You think the ECB, as it puts it, is exercising a robust and thorough test here?
Yeah. I compared to former stress tests, and that is also important, this stress test is definitely a step in the right direction.
And so this is also designed, of course, to put an end to the crisis of confidence in Europe. Is it going that step further?
Yeah, definitely. So also when we have to compare this stress test with former stress tests, it's a step in the right direction. And that banks were feeling very nervous about the outcome. You can see that on the preparation banks did in the last couple of years for preparing on the stress test. For example, in Germany, all banks nearly have deleveraged their balance sheets. Yeah? So that means the banking industry did many preparations for that.
OK, Mr. Hellmich, we'll get back to you in a moment. First, a closer look at the role of the European Central Bank. Its main purpose, of course, is to keep prices stable and also keep the financial system stable. That's what's been driving Mario Draghi and his central bank to keep lowering interest rates to historic depths. 0.05% is certainly something to write home about. The other stimulus it's deploying to try to foster lending to businesses and support the bloc is bond buying. It started buying securities, and there's speculation the ECB could soon start purchasing corporate bonds on the secondary market.
Opinions differ sharply about this man, Mario Draghi, head of the European Central Bank. His words move the markets. 2 years ago, he said whatever it takes would be done to rescue the euro. But in Germany, there is resistance to his policies. Draghi's best-known critic is Jens Weidmann, the head of Germany's central bank, the Bundesbank, and a member of the European Central Bank's governing council. Many economic experts agree with his criticism, like Professor Charles Blanchard.
Weidmann wants a more cautious policy. He wants the individual states to solve their own problems, rather than relying on eurozone rescue measures. So his goal is a stricter policy than Draghi's. Draghi wants to simply hand out money.
Professor Heike Jübkes, in contrast, agrees with Draghi. She says public disagreement among central bankers has negative effects.
What's currently happening is that Weidmann is damaging Draghi's image and thereby attacking the ECB's credibility. And credibility is the most important thing for a central bank. Our whole financial system is based on trust in the value of the money.
The bone of contention is the European Central Bank's unusual monetary policy. It's buying bonds from crisis-ridden countries. But who ultimately carries the risk?
The central bank is like a normal bank, except that it can't go broke because it can print money. But it has owners. For example, Germany owns 27% of the European Central Bank. Ultimately, the taxpayer is liable for what the bank does.
The tiny bit of risk we carry by buying government bonds, and it's not even certain that it's a negative risk, it could also lead to big ECB capital gains. I think this tiny bit of risk is worth taking because the alternative is really to let the already high unemployment rate in the eurozone grow dramatically. And that would impact Germany much more.
The ECB is going much further. It wants to ease the burden on the national banks even more by buying some of their high-risk assets. This is extremely unusual behavior for a central bank. And so Draghi is doing what he said, whatever it takes. Both he and his critics say the point of this is to rescue the euro.
If he didn't do that, at some point some country would have to leave the euro because it would no longer be solvent, and then it and the eurozone would have to reorganize.
Few economists believe such a transition could be coordinated. The few who believe it are not enough. You'd have to persuade all the financial actors. What we know about the past shows that such collapses of currency zones always proceed with an extreme lack of coordination.
So, who is right? Mario Draghi, who wants to retain the euro whatever it takes, or his critic, Jens Weidmann?
Mr. Hellmich, who are you cheering on, Draghi or Weidmann?
So in these specific questions, what were the activities of Mario Draghi in the last couple of years, looking on the younger financial history, high yields of Southern European government bonds, high funding rates for banks. So I would say Mr. Draghi had no other choice as doing that what he did.
And what he's doing, is it a step further in actually helping the banks?
So far it was not sufficient because a bank for delivering financial services to clients needs two things. Yeah, one thing is funding. Cheap funding is available, but on the other side they need also risk capital. So for many banks this is indeed a gap. So what Draghi is doing now with the youngest activities, or what Draghi is planning to buying pools of loans from banks, is now the second step, which is also logic to help banks now on the risk capital side.
Tell me, how valid is the point made in that report about Weidmann attacking Draghi's credibility and therefore attacking the credibility of the ECB?
On one hand side, it's important that there is an open discussion. It's very clear that there are perhaps contradicting interests. Yeah, so Weidmann is doing the right things. He's representing the interests of Germany here. On the other side, I do not believe that Mr. Weidmann's activities are destroying the reliability of these actions. But on the other side, I believe that what Mario Draghi is doing right now, he has no other options.
And the debate is all about buying bonds, something that's not unusual around the world for other central banks. But how risky is it?
In general, if the central bank is buying bonds, that is risky for the central bank. It can also, by the way, in the worst case, end up in a so-called technical default. A central bank is a central bank and cannot go fall into default in the usual sense. But it can happen that there is so-called technical default, and that happens exactly when all these assets they are keeping on the balance sheet will have low values in the future.
Martin Hellmich, thank you very much for coming along and joining us here on Made in Germany.